Hello everyone, and thank you all for joining us for our session today on practical approach to machine learning-based debt collection strategy in production. My name's Dawn Bowles, and I will be the moderator for this session. If you have any concerns, you can reach out to me through the chat interface. Challenges in your network. I cannot stress enough on the challenges collections teams across the world face today. Despite best efforts, organisations still struggle trying to reduce delinquencies and losses due to charge-offs. Now, AI is enabling banks and lending firms to transform their delinquent customer journeys without sacrificing on customer relationship. And at EdgeVerve, we stand at the forefront of enabling professionals such as yourself to leverage advanced technologies to achieve results in no time. We are bringing you this webinar where you can learn how to approach implementing AI and machine learning to your existing processes and transform your debt collection strategies. Allow me to introduce our speakers who will be presenting this session today. Nate Spiegel from Citizens Bank and Ashish Khandelwal from EdgeVerve. Nate Spiegel is the Vice President of Process Improvement and Change Execution at Citizens Bank and leads improvement and strategy-focused initiatives for Citizens Bank's consumer loan and specialty operations, bringing over 12 services and manufacturing industries. Nate ensures that Citizens is constantly evaluating and integrating cutting-edge fintech and industry best practices into its operational model for optimal efficiency, effectiveness, and competitive in today's market. Most recently, Nate has led a collaborative initiative with EdgeVerve aimed at leveraging machine learning to optimize the performance of Citizens' collection strategies. Ashish Khandelwal is the Director of Product Management at EdgeVerve and leads product management and research effort for business applications in lending domain. Ashish brings in over 18 years of experience with focus on building product and applications for the lending industry. He's been with Infosys Limited for over a decade in various capacities, working closely with the product team to build the product from scratch, as well as with the clients across the world, customizing and implementing those products to the client's specific needs. Currently, he is responsible for incubating new products with an intense focus on solving traditionally changing problems in lending with the application of advanced techniques in machine learning and natural language processing. If you do have any questions during the session, please use the chat interface to interact with us. And now I'd like to pass over to Ashish.
Thank you, Dawn. Welcome everyone to this webinar. As we all know, AI is no longer just a buzzword. We see application of AI in our daily lives in the form of products like Alexa, Siri, Netflix, and so on. Despite the fact that we see considerable increase in the planned adoption of AI, it's surprising that Gartner published a research which predicted that only 85% of AI projects deliver desired results. This basically means that 17 of every 20 AI projects was a failure. Well, this may not be as surprising if you consider that two stated reasons for the failure were, one, the amount of time and money investment required to create a production-ready AI system is beyond what people realize will actually be required. Two, replacing a legacy system not only involves the cost of replacement software, but also expensive process changes, retraining personnel, adoption of new systems. And unfortunately, these costs are underestimated on a regular basis, and they eventually become the cause of failure of AI projects. CollectEdge is a production-ready AI-based collection strategy system that is designed with focus on alleviating these bottlenecks. Through this webinar, I'd like to present to you a story of how with CollectEdge, we were able to smoothly enable intelligent strategies at one of our esteemed clients. I'm honored to have Nate from Citizens here with me to narrate bank side of the experiences with CollectEdge systems. In this session, we'll have Nate talk to us about common challenges banks face in terms of adopting AI and opportunities that are presented by a system like CollectEdge. We'll see how CollectEdge is designed to alleviate challenges around speed and accuracy of machine learning models. We'll talk about model validation, which is an important milestone in the whole journey as far as banking industry in general is concerned. And finally, we'll have a quick glance at business value realization, again from the bank's perspective, and how AI can generate business benefit for banks on production environment. And now, without further ado, I invite Nate to talk about the challenges that they were facing at Citizens and how CollectEdge was able to help there. Thanks, Nate.
Great, thanks, Ashish. Yeah, so just to give a little background, Citizens Bank has a broad retail product offering, including almost any consumer borrowing option that's commonly available today in the market. As we all know, optimizing credit losses and gross charge-off reduction is critical to any lender's success. And specifically, our ability to minimize the cost of collections ensures that we're making the most efficient use of our resources to collect on our debt. So we can all achieve significant improvements to operating expense and customer experience the better we get at this. And what's one of the first steps in this optimization journey? Well, one fundamental to have in place is accurate segmentation of your delinquent population. Quality, risk-based segmentation should, in theory, allow an organization to assign your collections efforts through channels of varying cost in the most cost-effective manner for the most effective result. While customers with large unpaid balances at risk may warrant more treatment investment, in other cases, perhaps the best strategy can be light, low cost, or even no treatment at all. Historically, and perhaps like many of you in the audience, we've used traditionally built statistical models to score our accounts so we can rank order and prioritize our collections efforts. But with these traditional methods, certain well-known challenges present themselves over time. First, it's fairly resource intensive to develop portfolio-specific models and to keep them up to date. By the way, those resources used to do that, they rarely reside inside the operations group. So a collections operations team is typically depending on external strategy and analytics, credit risk analysts, and execution groups to create, produce, and maintain these models. Additionally, often the complexity and the effectiveness of the models you develop can be limited by an organization's ability to aggregate data from many different systems, applications, and other data sources to make the data useful. Even if you can achieve that, and once you achieve that, and have built a good model or set of models, ensuring that all of your model's outputs can be operationalized as actionable suggestions is critical. Lastly, in some ways related to the first challenge I mentioned, as your portfolio makeup changes or external economic factors come into play, there are always needs to refresh or recalibrate your models to maintain optimal performance. This can be really time consuming to do at a regular frequency for the hundreds of traditionally built models you may have in place in a given banking organization. So as you can see, there's certainly a really strong opportunity to leverage automated machine learning platforms like CollectEdge to address these types of challenges. The primary benefit of switching to an AI machine learning based model is that we can now use far greater numbers of data features in a model, which gets smarter over time as you feed results back in. Also, a strong platform really automates and accelerates the traditional modeling process, and can provide documentation out of the box that of an explainable modeling solution approach, so that validators and compliance folks can take advantage of that, and it greatly accelerates time to production and speed of execution, something with which Ashish is going to get into in a little more detail further on. With most banks still evaluating their approach to AI and their data strategies, which are key to enabling these types of initiatives, many are conducting build versus buy analysis to determine whether it makes more sense to develop these types of solutions in-house or utilize external expert solution providers out in the field. And for while most organizations, or some organizations, I should say, the first route makes a lot of sense, especially with taking a long-term view, there's no doubt a platform like CollectEdge can accelerate your entry into this space, as we have while you're considering an internal fulfillment model. Lastly, customer experience can be an important additional benefit of the resulting optimized collection strategies in more mature implementations. In a nutshell, we're calling the delinquent customers that need the calls. A delinquent account segment certainly exists in both early and late stage delinquency buckets, upon which call investment is either not necessary, not productive. Not calling these customers, or perhaps leveraging a low-cost reminder-type notification rather than a live agent phone call, which is directionally more expensive, not only saves unnecessary resource expenditure, but can also make the experience for the customer less abrasive. So with that, I'll hand it back to Ashish for a deeper look into the benefits these models can provide in terms of speed of execution, not to mention some other things.
Thanks a lot, Nate. We heard Nate talk about challenges around accuracy and skill resource availability. I spoke a little bit about how underestimation of the amount of effort required and due diligence required to promote a POC to production is causing a lot of projects to not deliver the desired business outcome. In the next few slides, I'd like to talk about how we've designed CollectEdge with a focus on automating the activities that may potentially become bottleneck. For example, a good model strongly depends on how efficient feature engineering is. This is generally most time-consuming activity in the entire process. Extraction of most predictive features not only requires seasoned data scientists with deep experience and understanding of machine learning discipline. He's also required to have a fair amount of knowledge of lending domain. These combination of skills are generally not available in the market. Combining our deep collection experiences of lending domain and expertise in the field of machine learning, what we have done is built hundreds of features out of box. To give you a few examples, we have a feature that captures subtle changes in the borrower's data as opposed to looking at a snapshot view. For example, if I ask you, would you give a loan to a borrower with FICO score of 700? Or in this context, would you consider account risk-free or not? And you'll probably say, why not? It's a pretty good score. That's how traditional models work. Now, what if I told you that his score was 750 last month and 850 the month prior to that? Suddenly, the account is not as risk-free as you thought, right? Similarly, we have extracted features using borrower tone, length of the call, and content of the call, trying to link it with the confidence level that you as a lender may show in the promise to pay receipt. We have spent years of person-hours discovering these highly optimized features and canned them into a product for immediate use, so that we can pass on the benefits to you as our clients in terms of months of effort saved in trying to recreate them. The second consideration is ease of adding customized features. So over and above the out-of-box features that I spoke about, that are built as part of the product itself, we understand that there may be client-level data elements pertaining to their idiosyncratic processes that may be required to reflect the risk in the context of their internal processes. For example, you may have internal process to identify no-call accounts, or a process to flag accounts that need special treatment. Adding these kind of variables is a one-time activity and just requires adding transformation scripts into hooks provided by the pipeline. The third important factor is how fast you can generate a decent, accurate model. And CollectEdge is built on a proprietary advanced machine learning platform that comes with auto model selection features. So once the features are configured in the system, it iterates over multiple sets of hyperparameters working on multiple ML algorithms to come up with the best performing model. It may speed up the machine learning method by 150 times compared to other comparable platforms openly available. Employing deeply optimized algorithms, CollectEdge performs analytics in memory and utilizes latest high-performance computing techniques. So that gives us faster model, more accurate model. The fourth important component in operationalizing ML model is the model validation, the features, inbuilt features to support model validation. The product CollectEdge has a lot of audit and explainability features that ensures smooth model validation. For example, there's a complete audit trail of data files, the corresponding transformations, and the final model trained on those features. Similarly, the auto model feature creates a log of every iteration that may be very useful when model validation teams are looking for model performance benchmarks. During this presentation, we will talk more about model validation, a process from bank's perspective, and I'll let Nate to talk about that later. But explainability and also explainability feature in the product. The final important aspect of operationalizing AI model is the automated pipelines that can enable touchless experience in production. All of this is packed into the product that helps you realize business value in weeks as opposed to months. I'd quickly like to reiterate some business benefits that, and Nate touched upon some of these in previous slides. The first business benefit is, reduction in charge-off and enhancement in early bucket recoveries. This is enabled by helping you focus on risky accounts as opposed to self-pay accounts. Operational efficiencies basically increased by reducing overall unnecessary costs to self-pay accounts. Customer experience enhancement is enabled by helping you understand the customer call preferences, prime time for call, etc. We often hear the model build versus buy debate, and in certain cases, where building may be beneficial. But in most scenarios, we have observed costs of terribly. let's look at some of the reasons why CollectEdge will be able to provide business benefits faster at much lesser cost. So when you look at traditional statistical models, those are built on limited set of variables. And understandably so, the increase in number of variables exponentially increases the complexity and the manual effort required. Homegrown machine learning models may intrinsically handle complexity and provide better view of broader financial. But what CollectEdge does is it goes a step further and tries to incorporate broader, behavior along with broader financial that gives a better holistic view of the customer. For statistical model, again, manual effort and the time that is required to build the model and the accuracy of the model is dependent on the skills of the modeler. ML models, again, are time consuming. It depends on the skills of the modeler in terms of accuracy. We've seen how CollectEdge has automated some of the data science activities, which helps you creating highly accurate models without dependence on the skill sets that may be required for traditional model building. In terms of operationalizing machine learning model, usually what we have observed is homegrown machine learning models are built as a form of POC, and then they are pushed into production in a haste. CollectEdge, on the other hand, is built with a focus and due diligence in terms of making sure that the product is ready for production. There's an inherent focus on compliance, and all of this actually enables us to realize value in weeks rather than months. I want to talk a little bit more about how CollectEdge helps in creating more holistic view of customer as opposed to partial view given by just looking at the financial data. We are using natural language processing techniques to analyze other text data that may come in the form of customer call logs or intent statements or even collector's notes to map customer behavior. And that is used in those insights are used in a couple of ways. One, it's used to understand customer better in order to assign personalized call scripts, for example, or assign case to collection agents who may be more experienced to handle that specific case. Two, the data is incorporated into the features to indicate willingness of the borrower, along with the data that represents financial ability of the borrower. And through an ensemble of decision tree classifier, this helps in boosting the overall accuracy of the risk segmentation. Once the model is created and evaluated on out of time and random dataset, it will go through the model validation process. And I would again invite Nate to present Bank's perspective on this topic and also his experiences with CollectEdge during this stage.
Great, thanks. So yeah, let's talk a little bit about how model validation disciplines in banks today are adjusting and adapting to effectively evaluate and validate AI/ML models. So there are certainly some challenges here, but with the right approach, this doesn't have to be a momentum-stopping bottleneck to your initiative. We, I'm sure, like most of you listening, have a great model risk management and validation group. And it's important to remember any group of this type, their primary objective is not to serve as an obstacle, but rather to support and accelerate the development of quality models, while also ensuring compliance with OCC guidance. That said, AI and machine learning models and the automated processes to generate them they're fairly new in terms of their practical applicability and broad-scale adoption. While maybe more so a few years ago than today, there's still a perception of machine learning models as black boxes, wherein the steps taken to arrive at the resulting model aren't always immediately clear or able to be replicated. This is an understandable cause for concern from our risk and compliance groups, especially considering the enormous amounts of data we're now able to process. Regulators will expect that organizations leveraging this technology will be no less effective in our validation routines than we historically have been when looking at traditionally built models. So, how do we address these concerns when leading these types of initiatives? First off, and I'll highlight maybe the most obvious piece of advice, you really want to put the work in to engage your stakeholders early in the initiative. Educate them on this tool and make sure you clearly articulate the what's, whys, and how's of the models you're building, with AI being the buzzword that it is today. So it's critical to help your partners and stakeholders understand what it is you're building and how it will bring about benefits to your business. So a strong automated platform or tool like CollectEdge can help with this communication throughout the initiative and the entire development cycle. Ashish briefly touched on a few of these earlier, things like out-of-the-box visualization capability within the application, including visualization of the feature selection, model training, optimization, and resulting model structure. Things like sensitivity analysis, comprehensive audit trail along the whole end-to-end development process to enable validators to easily trace the iterative approach that was taken, and even perhaps an under the hood look at the inner workings when necessary, so that validators can get a comfort level that the model will produce an output as designed and expected. Validators often want to replicate the model in a preferred statistical package such as R or Python to ensure they can produce a similar result using the same model type and features, and transparency in this area can really make this possible. So challenges certainly exist, but the recent commitment these leading vendors in the space have shown towards providing not just effective but explainable solutions, it's going a long way to ensure the passage of these initiatives through even the most mature governance frameworks. So I'll pass it back to Ashish. He can get into a little more detail on ways his tool can facilitate explainability.
Thanks, Nate, for your kind words. So we heard Nate talk about the intent behind model validation process at bank. The key really here is to make sure that there is enough visibility available to the validators to verify against any kind of misuse. In my previous slide, we talked about a few out-of-box audit features available in the product to facilitate the model validation process. Understanding of inner workings of model is of utmost importance to the validators. We have additional features that primarily help solve that specific purpose. The product offers view into model-level variable importance that provide indication as to which features are playing, key role in prediction. But what we do is we go a level deeper and also look at important features that are and their value ranges that impact single prediction. While in general, traditional ML models are notorious for being black boxes that may force you to trade off achieving accuracy, to achieving desired level of explainability. This feature allows you to retain the level of accuracy without compromising on the explainability, which is core to the whole model validation exercise. Also, we have a very powerful tool called partial dependency plot to further understand the complex relationship between the risk and other variables. In this example, we are showing how risk is dependent on home ownership status in various cities. In terms of benefit, we can feed the insights generated from the explainability of various levels of explainability that we spoke about into, for example, to fine-tune and improve the overall quality of the loan pipeline. We've all spoken enough about how these features facilitate smoother model validation, but more importantly, it helps in increasing the user confidence since every prediction is backed by a reason. Well, the biggest litmus test, in my opinion, for any machine learning model is the actual performance of the model in production. And we are proud of the fact that we have been, in collaboration with Nate's team at Citizen, being able to deliver much higher results than were expected. So I don't want to steal the thunder here, so I will let Nate speak about the results in production. Nate, over to you.
Great, thank you. Great. Yeah, so at this point, you've heard us talk generally about the challenges we all face, how AI-based models can address some of these challenges and accelerate benefit realization. But I want to take a few minutes now to share some more detail on this particular use case where we've actually seen some success and put this into practice. So just to frame it up, our sector and collections in particular, it's constantly challenged with the need to improve resiliency to changing delinquency rates within the portfolio for any number of reasons. I'm sure we're not alone, but the level to which we had sophisticated segmentation across the entire delinquent population in different product groups, it's historically varied quite a bit. And as I mentioned toward the beginning of the presentation, the level of effort and resources required to develop advanced segmentation and keep these segmentation models updated has been an obstacle. So at some point a couple of years ago, we recognized the opportunity to partner and leverage AI and advanced machine learning to automate the creation, the recalibration of segmentation models across products. Building on that, we took the scope a step further to suggest the optimal contact, which has obvious benefits to collections effectiveness, while also keeping customer contact preferences and convenience in mind. This optimization has resulted in overall lower collections investment per loan and in a reduction of roll rate for accounts into the later delinquency buckets, which eventually contributes toward a reduction in gross charge-off. In portfolios like auto and even mortgage, where the cost per loan can go up dramatically in bucket 3 and on, we're able to lower the cost per loan by reducing collections, repossession, loss mitigation, foreclosure activities, for example, in those stages. So we have a much more accurate picture now of our low-risk segment, where most of the accounts are, and it allows us to limit calls to this population without negatively affecting pay rates. Conversely, as mentioned before, we're no longer making collections attempts on accounts that our models predict have very low probability of paying or curing. So in order to maximize and expedite benefit realization, this was done as a proof of concept, but then pretty quickly put into production in an agile format. First with an MVP scope and building out from there, building out additional functionality in phases. We've seen really strong benefits in taking this approach in terms of securing a comfort level with this type of technology across the organization. And this only further serves to improve the future success of our efforts to scale this solution out and explore and implement new solutions like this in the future. So speaking of the future, what's next? Well, looking forward, we may expand into some of the things Ashish mentioned in previous slides to deliver advanced insights, for example, into customers' personalities that live agents can use to tailor the tone of conversation, to further make the segmentation even more accurate, And this all serves to increase the customer experience and effectiveness simultaneously. We're hoping to be able to additionally predict delinquency in the current non-delinquent population and proactively intervene with a type of friendly reminder communication. So the possibilities here with this type of technology, virtually endless. And opportunities exist not just in collections, but across the spectrum of businesses, from fraud to servicing to origination to supply chain and onward. It's certainly an exciting time. We're very happy to be getting involved and working with experts in the space. And with that, I'll hand it back to Dawn, the moderator, to facilitate some Q&A.
Okay, well, thank you, Ashish and Nate, for your insights and taking time to share this with all of us. I think you'll all agree that this is definitely going to be helpful to financial efforts, and I believe we are looking towards an interesting period in this space, with AI providing more opportunities to banks and financial institutions. So that brings us to the end of the presentation, and it's now time for Q&A. So if anyone in the audience has got any questions related to our session, please use the chat interface to share it with us, and we'll be happy to answer it for you. Okay, so I can see that we have had our first question come in, which is, what are the types of data elements required for CollectEdge implementation? So Ashish, can I pass that one over to you, please?
Yeah, sure. So we've seen during the presentation that CollectEdge is designed to have flexible data model. We work with clients to discover, predictors that are available with them and configure those as features. At a high level, I can divide the type of data that we look at into three broad categories. Internal transaction data that will come from internal collection, customer relationship management system, call logs, and external data that most banks order from credit rating agency. This category of data is usually easily available with banks. The second category is this as well, and how we're using it to generate willingness score of the borrower to enhance overall efficiency. And these may exist in the form of voice transcripts or recording or similar form of voice or textual data that can be used to extract third category is the data cloud that is part of the offering. That does not only include macroeconomic factors like GDP and unemployment data, but also weather patterns and sentiment extracted from the news article, which are then fed back into the model, and it makes the whole model more robust.
Okay, thanks.
Back to you.
Lovely. Thanks, Ashish, for answering that. So the next question that's come up on the board is for Nate, which is, what would be your advice to other lenders like us who may want to implement CollectEdge?
Yeah, sure. That's a great question. So I'd say I have a few suggestions on how to approach this or initiatives like this. Not only from an execution standpoint, but also in order to make sure you're promoting these types of initiatives within your organization's culture. So, number one, spend time up front identifying a solid use case and framing out a solution that will bring real, tangible, measurable benefit to your business. It's absolutely worth the time and effort to conduct a detailed workshop or design thinking session to make sure this is well thought out. Any identified opportunity really needs to be achievable and scalable so that you can extend the benefit on an ongoing basis if you're successful. You don't necessarily have to boil the ocean all the time to make significant improvements using this type of technology. Without the proper upfront consideration, you can easily go down rabbit holes and sign up for more than you can deliver on. Things can quickly get out of control, and the last thing anyone wants to do is deliver under expectations. So especially where the technology infrastructure to support a lot of these types of initiatives is going to be new to most organizations that are just setting out on this path, it'll be especially important to achieve a quick win to prove the value to the organization and encourage further adoption. I already talked about early and abundant communication when setting out on one of these initiatives, but just want to stress this again because of the novelty of this type of effort. This should include a bit more than the usual amount of engagement with your risk, compliance, and other stakeholder groups through your typical change management forums. Going the extra mile will eliminate a lot of the common misconceptions around AI that could manifest in unrealistic expectations from stakeholders, from management, and really bring about adverse impacts to the initiative if left unchecked. And lastly, from the cultural perspective, it's very important to promote augmentation over automation. Folks' instinctual reactions to the terms AI and automation often conjure thoughts of losing control or even losing jobs, when in reality, there's significant potential to augment your workforce by moving it in a more strategic and innovative direction, where colleagues are placing a lot more of their focus on improving the customer experience than navigating all these time-consuming manual processes that can be so prevalent in large operational groups. So really taking that time and energy up front to hone in on and select the right use case that highlights these benefits of AI, I think that they'll garner acceptance towards these types of initiatives in your organization in the future.
Okay, thank you, Nate. And our next question is, how long does the CollectEdge implementation take, and how long would it take in realizing value in production? So I'll pass this one over to Ashish.
Yeah, thanks, Don. The implementation of the product takes, 4 to 6 weeks. We can divide the whole process into 2 phases just to give a little bit more detail. The first phase is discovery phase, where we work with our client teams to understand their data sources and configure mapping with our out-of-box data model. Client-specific features are discovered and configured in the pipeline during this phase. Product tenant set up on the client on the cloud, and the pipeline configuration happens in parallel. During the next phase, which is implementation phase, we run iteration of the model optimization and come up with the best model based on evaluation on out of time and random test data. The best model is sent for model validation. Model validation may take 1, 2, or sometimes more time depending on the process and compliance requirement of the clients. And once a go-ahead from model validation is obtained, the pipelines are triggered to predict daily transactions in production. Right. So that's in brief what it takes to implement CollectEdge in production.
Okay, thank you. Now I've got one more question here at the moment, and that is, would you give your thoughts on what makes CollectEdge unique to the market? Machine learning is not new, so what separates this from the market? I'm going to pass this first of all to Ashish, but I think it would also be interesting if we also ask Nate to answer this question too.
Sure. And I think that's a great question. There's the first thing is I think if you look at the available AI and machine learning based solutions today in the market, and you ask the first question, how many of them have gone live into production? I think that will be your first filter, and you lose a lot of those products, right? But what makes CollectEdge unique is, unlike general AI platforms that are available in market, we've created specific business cases, to solve focused business problem and derive value as fast as possible. Over and above, in context of collections, what we are doing is, as I said earlier, we are not just looking at, the financial and transactional data, which is how traditional machine learning and most, existing machine learning models work. We are using advanced, natural language processing techniques to extract behavioral data and bring in the willingness aspect into the financial ability aspect, and give the risk score a holistic and more rounded, view, right? And one thing that completely differentiates us from the other products available in market, that once the loan reaches in collections, suddenly there is a lack of focus on customer experience, considering the fact that your 80% of the loan delinquent portfolio is still self-pay. It consists of self-pay customers. You wouldn't want to defocus the customer experience aspect, and that's what we are trying to bring into focus here, right? We're trying to basically talk about customer experience, even through our differentiated treatment strategies for collection.
Yeah, and I'd like to add to that a little bit. I mean, here at Citizens, we've engaged in many initiatives internally and with other providers with ML technology. Some have been successful, but with some others we've struggled. And what we've definitely seen with CollectEdge is there was a clear benefit in terms of speed to deployment. One of our biggest challenges, almost any time we try to do something like this, it's been in the aggregation, the sourcing, I'd say, the aggregation, conditioning, and joining of data from multiple structured and unstructured sources. And this was made noticeably easier with this tool, as they were able to essentially take everything we had and then quickly, turn those activities around. Another thing, and I said it before, but it was extremely critical and contributed to this speed to deployment, was the fact that the amount of documentation typically required to put together to document your model development from a technical standpoint, it's enormous. And this was done very, very quickly by leveraging a lot of the out-of-the-box capabilities in the system, capabilities to display the type of information that our validation team needs to see. So, you shave several weeks, if not, a month in some cases, just trying to get all that together. So that's definitely a differentiator as well.
Okay, thank you, Nate and Ashish, for answering those questions. Well, that's it for today's session. So thank you everyone for attending. If anyone does want to revisit the webinar, you'll have access to the recording on BrightTalk in a few hours, and we will also be sending you the link to the recording. If you have any update in the coming weeks on a new product that will also be available, so please keep following us to stay updated. And if anyone from the audience would like to get a quick look at CollectEdge, please drop us an email and we'll get in touch with you quickly. Thank you.